Good evening. I welcome everyone on behalf of the Directorate of Journal and Publication of the Institute of Cost Accountants of India. Today, we are going to start a fresh webinar on the topic Cross-Border Audit Key Considerations. Today, we are having with us our learned resource person, Dr. Sanjeev Kumar Basu. We are having our Central Council member and chairman of Journal and Publication Committee, CMA Harshad S. Deshpande sir. We are also having CMA Shucharita Chakraborty Madam, HOD Journal and Publication with us. Before we start our today's webinar, we will play our institute anthem to start the program with the auspicious note.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति।
Now, I would like to request our respectable chairman, sir, CMA Harshad S. Deshpande, sir, to give his valuable welcome address. Over to you, chairman, sir.
Thank you very much, Somalika, and very warm good evening to one and all. I'm grateful to our learned speaker today, Sanjeev Kumar Basu sir, for being considerate enough to take this webinar on this a very interesting topic. I'm thankful to my department, Journal Publications, led by HOD Sucharita Madam and Somalika and other team members. So friends, today we are on 30th of June. So today or tomorrow perhaps would be celebrating our GST day. And on this auspicious occasion, I would like to give you my uh, wishes in advance to you on the uh, of the GST day, which is to be celebrated on 1st of July. We as a CMA, we are known to be an expert of indirect taxation, and perhaps GST is the one of the prominent area wherein we work. Today we are going to discuss about a very interesting topic, that is a cross-border audits. So friends, being auditor, I mean the audit doesn't mean restricted to financial audit. Many of us are doing a lot of audits, may it be cost audit or may it be the GST audits. So most of as the India as the economy is growing, and especially after 1992 when we adopted that famous policy of LPG, we have seen there is a lot of international business that is happening around us. Most of our clients, you will see that they are engaged in some cross-border activity. May it be the case of either import or may it be the case of export. Either ways, we are connected. Further, there were a lot of, initial days we used to have MNCs, multinational companies that were operating from the countries, overseas countries, and operating in India. Nowadays, we are also changing a very paradigm shift into the Indian companies venturing into cross-border arrangements. So the days are coming when Indian companies, they are expanding their feet in the global scenario, and many companies do have their subsidiary companies or branch offices located at foreign locations. So keeping in mind this in mind, that we thought let us take this opportunity. In the last month journal, we had this theme of about the Indian financial regulatory system. So on which we have various articles. So on this occasion, I would like to say a few words about that cross-border audits, and rather these are the there are certain key considerations that we have to keep in mind, and our learned speaker, of course, will be taking it up. I find that one of the most important challenge remains is that regulatory diversity, that you need to know about not only the audit from the perspective of India, but also you have to look at the perspective of a globe and the practices which are there. Uh, I am also working in the domain of insolvency and cross-border insolvencies. So I find it very interesting. The reason being is that we are aware about Indian law. So what happens on the counterpart, like what is the law of Singapore, what is the law of maybe America. So that is what is the learning, and that gives us a lot of understanding of the ecosystem that we are adapted. So friends, on this note, I would like to say once again, thanks all of you for joining this webinar. And I request our organizers to take it forward. I'm grateful to our speaker, Sanjeev sir. Thank you very much for joining. Thank you. You're on mute, Soman.
Thank you very much, Chairman sir. You have already put the tune of today's program. Now, I would like to introduce our today's resource person, Dr. Sanjeev Kumar Basu sir. Dr. Sanjeev Kumar Basu is working as the Dean in the Postgraduate and Research Department of Commerce of St. Xavier's College, Autonomous, Kolkata. He has been in academics for over 30 years, teaching both at St. Xavier's College and St. Xavier's University. Dr. Basu is the author of 8 textbooks for graduation and professional bodies examinations, including the book Auditing and Assurance, published by Pearson Education. He has presented a number of research papers at various national and international seminars in different countries, including Singapore, United Kingdom, Poland, and Australia. He has also been invited to act as resource person and keynote speaker in various professional institutes and universities in India. He is currently involved in consultancy works and has completed a number of projects in the capacity of advisor and subject matter specialist. We are very much eager to hear from you, sir. Now we are handing over the session to our resource person, Dr. Sanjeev Kumar Basu, sir. Over to you, sir.
Yes, thank you, Shamalika. Let me start with the discussions on cross-border audit. Though it is not mentioned in my profile, but I have some experience in conducting cross-border audit throughout the globe, because at present we, the cost accountants, are not only the public accountants in India, we are also the global accountants. So we have the capacity, and I am going to share some of my real life experiences, that how I have conducted the global audit, that is the cross-border audit in different countries, including South African countries. Say, for example, we have been there in Nigeria, we have been there in Egypt, we have been there in Middle East, and so many other countries. We have conducted our GST audit. So let us, the cross-border audit. Let us start with the concept of cross-border audit and what are the key considerations. That means what are the aspects we have to take into consideration while conducting audit. And at present, our audit is not only manual, it is only 2 to 3% we are conducting manual audit in case of small and medium enterprises. But when we are talking about the global arena, in that case, so you'll get only the online data and data privacy, because the clients are giving you data online. I can recall, I'm just giving you one practical experience. At one point of time, I was supposed to conduct audit of an Indian multinational company which has the branch in Pakistan. So none of our members are interested to go to Pakistan to, I'm talking about the physical uh, or the manual maintenance of books of accounts at that point of time. So none of our colleagues are interested to go to Pakistan at that point of time. So they have brought all the documents to Dubai, like the India-Pakistan match. So it is neither held in India, not in Pakistan. It is held in Dubai. Similarly, so accounts are maintained in Pakistan, but the auditors are from India. And so we have conducted our audit. So taking all the documents from Pakistan to Dubai, and we have conducted and completed our audit. So this is the global audit. One more thing I would like to, so that you will be able to relate all these issues. I can give you some more examples. Say, for example, so everything is not possible to do online. Say, for example, the physical verification of goods or the stocks, physical verification stocks. We require to visit those places in order to conduct the physical verification of goods. Now we see at present, I can recall one incident happened in Ramadan city near Egypt. Another incident was happened uh, in Sharjah. You may heard about the term Sharjah. Sharjah is also famous for this. So where I have to do physical verification of stock, because in one place it was due to the fire broke out. So we have to certify the quantity of stocks that has been broken down due to fire. So in that case, usually earlier we used to go there in order to do the physical verification. Now it is not required due to this digital arena. We are not required to visit those places. So it is through the digital or through high-end camera. So we can see their stocks, and we can even count their stocks. Anyway, in this aspect, I can share some of the presentations. Then you can get the idea that what we are going to give. So far as the presentations are concerned. Now, tell me whether the presentations is visible or not. Madam, presentation is visible.
Sir, the Teams window is visible. Presentation is now it is visible, sir.
Now it
Now
is
it is
visible.
visible.
Okay,
Yes, sir.
okay,
Yes,
thank you.
sir.
Thank you. So we'll be talking today about the cross-border audit, the key consideration. That is the subject matter of today's now discussion. Now let us start with the concept of cross-border audit. You may have the idea that cross-border audit is only the audit in a different country. It is not only the audit of different countries. It can happen in India itself. Some of the Indian companies which are involved in the international transactions. I'm repeating, the Indian companies which are involved in the international transactions, foreign currency transactions. So those transactions are also subject to audit, and it is also called the cross-border audit. So let me explain the concept first. What is cross-border audit? You see here I have written that it refers to the process of auditing entities. That means we have to go to a different place. Maybe we have to go to Pakistan, we may go to England, UK. I have the experience of conducting audit there. We may go to UK, or we may go to USA, or we may audit some of the transactions. But the character of the transactions will be like that. The transactions will have to involve itself with multiple countries or jurisdictions. So here I am using the term countries as well as jurisdictions. Why am I using this term jurisdiction? Because a multinational company, say for example Samsung, or generally it is GE, so they are having their outlets, offshoots, not only in India, because we are experiencing their presence in India, but see in some other countries also. The German company or Samsung is a South African company, but only at one point of time they cannot work in India as say Samsung South Africa. So it was South Korea. Say it was Samsung India Private Limited or Samsung India. So it has to be required to be have some Indian offshoots in that case. But at present, we have the liberty to work in different countries. Taking, say, for example, I can recall the name of Dabur India Limited, or we can have the concept of, I'm talking about now the Indian companies which are having businesses throughout the globe. Dabur India Limited have told, ITC we have told, these are the multinational Indian companies. We can think about Unilever. So these are the companies which are required. And I am telling you one thing, at one point of time, when we used to conduct audit, I'm talking about say 30 years back, when we used to conduct our audit, in that case, we have to prepare, in fact, two sets of accounts, at least one as per AS, that is accounting standards, which are applicable to India. Other one is it is called IAS, the International Accounting Standards. So both the sets of audit, financial statement are required to be audited. Both the sets of financial statements are required to be audited at that point of time, because you see, there was a criteria at one point of time. So if your financial statements are not converted as per the US GAAP, you can recall I have talked about AS, I have talked about IAS, International Accounting Standards. Now I'm bringing the US GAAP. So in case of US GAAP, if you do not convert your financial statements as per US GAAP, in that case, your shares will not be listed. You are the Indian companies. Your shares will not be listed in the US, that is the New York Stock Exchange market, the largest stock markets throughout the globe. So it was not possible at that point of time. Now we have, in order to avoid this problem, the IFRS came into picture, though we are having the Ind AS, but basically for the summarization, consolidation of accounts of different branches, different outlets, or different branches or offshoots. Even for your information, different banks. I can recall the name because we are the auditor of State Bank of India, central auditor at one point of time. So they are also having foreign branches. So that is why when we are talking about cross-border audit, so cross-border audit not only applicable to multinational companies, that means Indian multinational companies, the example I have given, Unilever or ITC or Dabur, or the foreign multinational companies, say for example, G, I have given the example, I have given the example of Samsung. So it is not only for multinational companies having branches, or outlets, or establishments, offices in different other countries, but also it is applicable for international financial transactions. International financial transaction. That means exclusively Indian companies, but they're having the imports as well as the exports. They have the derivatives required to be transacted. In those cases, also it is basically the cross-border audit, because all the documents, so we are getting from our end, we are not getting the information from their end. So if it is required, it can be done. But what is more important, in order to conduct audit in different other countries as a cost accountant or as a chartered accountant, or in simple as a public accountant, if we conduct audit in different other countries, so in that case it will only be possible if we have the memorandum of understanding with those countries, that our our chairman sir is talking about Singapore. Yes, I can refer one MOU with the Institute of Chartered Accountants of India, with the Singapore Institute of Chartered Accountants, that there the Indian Chartered Accountants also conduct audit in that country. Similarly, the ICWAI. So we have some more where our Indian cost accountants can also conduct audit in different other countries. So this is important. That is why I have told that it is not only audit of multinational corporations, it is audit of international financial transactions or entities with operations in several countries. Two examples already I have given regarding the audit, stock audit. If in fact, not only stock audit, I'll come to that point later on. So some of the Indian multinationals, we got the opportunity to work there for the impairment of assets. So it is the impairment audit that we have done. It is also the cross-border audit. So it is not that type of audit that is the financial audit or cost audit or tax audit. So we cannot categorize any type of audit which crosses. It may be the financial audit, it may be the cost audit, it may be other audit. So in that case, so if it crosses the boundary of a particular country, so it is not only applicable in case of India. I'll give you a separate number of laws, data laws, because the data is required to be given. You say a number of our big firms, so they are conducting, they're having the audit departments and they are conducting say tax audit. You are also, that is, we are also as a cost accountant are also entitled. So tax audit. So in that case, our foreign clients, individual clients also, they provide us the data. So here, in order to protect the privacy of the data, it is very much required that Indian, not only Indian government, all the foreign countries, USA, UK, European Union, China, because you know China is very much restrictive about the sharing of data. So I'll come to that point of what type of restrictions they are including. So in that case, we have to visit those countries. They will share us the data. Data has to be deactivated, what it is called. The data has to be deleted as soon as the audit is over. This is also there. I'll come to that point. These are the key considerations I have to discuss. But before that, some of the key aspects of cross-border audit, some of the key aspects, I think you'll get some idea. Number one is the global audit, group audits, audit of groups, as already I've told, that operates in multiple countries, require coordination among auditors from different jurisdictions. Say, for example, we the statutory auditor of an Indian multinational companies. And in case of Indian multinational companies, so here we are not required to follow AS or Ind AS. We have to follow. I'm telling because the problem is all the countries are supposed to adopt IFRS, but all the countries are not supposed to adopt Ind AS. Ind AS is our own. So in that case, so when we conduct audit of different branches located, situated in different other countries of Indian multinationals, because you know, you can take about the example of subsidiary. In case of subsidiary, we have to prepare the consolidated balance sheet, consolidated profit and loss statement, consolidated cash flow statement. All these are required to be consolidated. So uniform accounting practices of the group which we are following in India has to be followed in Dubai, has to be followed in Pakistan, has to be followed in Sri Lanka, has to be followed in different other countries where our branches are located. So when we are talking about the group audits part, as I've told you that in some cases the Indian auditors are not eligible. Professional or public accountants of India are not allowed to conduct audit. In some of the countries, they are not allowing. Say in that case, we have to take the help of the auditors of those countries. They will do the branch audit and they'll share the branch audit report with us. So that is why in that country, if we get the audit report for the purpose of consolidation, so coordination among auditors from different jurisdictions, different countries are required. Say Middle East, say South Africa, say African countries, say European Union, say OPEC countries, say we require coordination among themselves. Second point, these are the key aspects, not the consideration. Consideration I'll come to later on. The second one is the international financial reporting standards. So you know, auditors may need means it depends whether the companies are following IFRS or not. Say for example, all our Indian branches located in different countries, they are also following Ind AS. In that case, consolidation, in this case, reporting is not an issue. But if they have to comply the IFRS in order to prepare the financial statements, so in that case, auditors may need to consider IFRS requirements when conducting cross-border audit, because in that case, ACE is not applicable. In that case, Ind AS is not applicable. Only IFRS is applicable. Third one is very, very important. Our chairmen are already given some hints on this. That is the regulatory compliance. Our Indian Companies Act is applicable only in India, but different other countries having their own corporate laws. I'm not talking about only Companies Act. I'm talking about different corporate laws. Even in maintaining our books of accounts, we have to take into consideration not only the Companies Act, we have to take into consideration the SEBI guidelines. Say, for example, the code of conduct we have to take into consideration. Similarly, say in USA, so there is Security Exchange Commission, they have to take into consideration that aspects also. So different countries have their different regulators. So here our banking organizations, it is being regulated by the RBI. Similarly, central banks of different other countries, they are regulated. So regulatory compliance is a must for conducting audit in case of cross-border audits. So first point I have told, that is the coordination among the global auditors, that is the group auditors. Second one is the compliance of international financial reporting standards. Third one I have talked about regulatory compliances. And the fourth one is communication and coordinations. And you know, some of the countries, you may be surprised to know, some of the countries are maintaining their books of accounts in their own languages. It is not compulsory. They have to maintain their books of accounts only in English. English, of course, is an international. It is required to be translated in Indian, in the international languages. It has to be. But in some cases, they have to maintain their books of accounts in their regional or the country language. So that is why it is required to be converted. Effective communications and coordination among auditors, clients, and regulatory bodies across different countries are very, very crucial. I'm not talking about the important. It's crucial means complex. It is a great job you have to perform in order to do cross-border audit. Coming to the challenges, yes, of course, it is not so easy to conduct the cross-border audit. It is not so simple to conduct the cross-border audit as I have got the assignments. Tax audit is very simple because so we know at present AI helps us to the extent possible in order to download whatever may be the standards, what may be the regulations. So everything is now available to us, so we can conduct cross-border audit in different dimensions. But the problem is our cross-border audit can be complex. These are the reasons. Number one, accounting standards. Already I've mentioned India is following ACE or Ind AS. Australia is following their Australian GAAP. US is still following. You know, when we have started our accounting standards, then Manmohan Singh ji, our Prime Minister at that point of time, promised that we will start adopting IFRS from 2000 to 2011, but it was deferred to 2015. USA was supposed to adopt their IFRS from 2015. This is 2025. So I have every doubt that means they have taken into consideration a lot of changes in their US GAAP to make it align with the IFRS. But the problem is a number of other countries, they have not yet converged. I'm using this term, converged with accounting standards. Even so many carve-outs are there in our Ind AS. So what we are following IFRS is different. So in that case, it becomes complex for us to keep in mind for us as auditor, what is our Indian accounting standards, what is accounting standard I'm talking about is, what is Ind AS, what is IFRS, and what that particular country is following. So accounting standards becomes a very complex term because we have to take into consideration those aspects in order to not only preparing our financial statement, but also in order to audit their financial statement. Second one is coming is auditing standards. Auditing standards, it is changing over the generations. when I was also not born in 1964, we have the auditing guidelines, AG, or International Auditing Guidelines. It has been changed to SAP, Statement of Standard Auditing Practices. Then we have Auditing and Assurance Standards. Now we are having the fourth generation standards and auditing. Thanks to our regulatory body that I'm talking about, Ministry of Corporate Affairs, that they have recommended the standards on auditing, which is 99% complied with the international standards on auditing, ISA. Our Indian auditing standards, that is SA, is more or less similar to ISA. However, there are certain, and still I can recall that there is some peculiar standards. So it was only applicable in case of India. It is not applicable to any of the foreign countries. It is not there in ISA. Say, for example, SA 299. SA 299, that is standards on auditing, talks about the joint audit. Joint audit, you have to see when we are conducting bank audit. So 5 to 6 central auditors are appointed and they have to complete the audit jointly. This concept of joint audit is not there in the international area. So we have to take into consideration that aspects also. Third one is the regulatory requirements. Already I have told our Companies Act is our Companies Act. British Companies Act is different. USA, their regulations are different. European Union, their regulations are different. African countries follow a different. They are also having Companies Act, of course, 2005. I think I have recall that is the Nigeria. The Companies Act is 2005. Latest it was developed or not, I have no idea. Anyway, so they are following their own regulatory requirements. So when we have to conduct audit on behalf of Indian multinational in Nigeria, or Indian multinational in Fiji, or Indian multinationals in any of the European countries, in that case, we have to take into consideration their or regulatory requirements, not our Indian regulatory requirements. That is why, you know, when the Indian consultants, I'm using the term consultants, they are doing tax consultancy of a different country, they have to be aware about the tax related all provisions applicable to that country. And finally, these are the aspects and challenges I'm talking about. Finally, language and the cultural barriers. I'm giving you a very simple example. With the Indian professional accountants, they have it of conducting audit throughout the day, even after 7, after 8, after 9, even Saturdays and Sundays, we are conducting audit. So I have the experience of doing it in UK. I am talking about United Kingdom, Britain. So they are very much particular. They start their workshop at 10, they'll complete at 5, and they will not do any overtime work if they are not, because it is we have to go there, we have to complete our work. Our flight ticket is booked, we know we have to come back. So we have, this is, I'm talking about the real challenges. We have to come back, we know when our flight is, and we have to following the audit program, we have to complete our audit work. But the problem is this, they will not work Saturdays and Sundays, because in, as I've talked about, is a group audit. Some of the issues we have to sit with them. So in order to consolidate the figures, we have to depend on the branch auditors from that particular country. Not only that, as after the language is also important. I am telling you, for your information, I got a very good experience in Cairo. So when I reached Cairo, the first word I got from over telephone from the accountants of the company. So he spoke Bengali. So I was surprised. I am very much happy. So he has told us I am born and brought up in Kolkata, so I can speak, though he's not a Bengali fellow, but he can speak in Bengali. So he has told us I am very much comfortable in Bengali. So I was happy. But ultimately what happened? So when I have been there, any senior, they can speak English. I'm talking about senior officials. But at the junior level, if we require to interact with them, so they do not know English. They do not know Even I had the idea because it is the Cairo or even other countries, I think they will be able to understand Urdu because it is similar to Hindi. So if we can speak Hindi, so they'll be able to understand it. And if they speak in Urdu, we can understand it. But you surprised to know that in that country, most of the people are speaking in Arabic. So it was difficult for us because that I've talked about the language barrier or the cultural barrier. High level officials, they are very, I'm giving you experience of different types of big companies, bigger companies, biggest companies, small companies, or more or less medium companies. So it happened. Usually we are not taking small companies audit. They cannot afford to have the foreign auditors, but in case of medium, so it can be done. Anyway, so these are the challenges I have talked about. Now, uh, yes, now overcoming challenges. How can we overcome these challenges as I have pointed out? Number one, I have told that to overcome these challenges, auditors may use various tools and techniques, and we have to follow this. I have given 4 examples. International auditing standards, ISA, already have told. And it was, we are in a very comfortable position in India that Indian standards and auditing, SA, is more or less similar to, subject to few exceptions. It is more or less similar to international standards and auditing. So if you go through the Indian standards and auditing, so you'll be comfortable with international standards and auditing. Basically, it is a copy paste of international standards and auditing. Second one is the global audit methodologies. And I can say you that we are far ahead. We are advanced in the case of adopting different audit methodologies which are global standards. And you know, so when we are doing around the audit, around the computers, that means when you do the audit through softwares, so our Indian cost accountant and chartered accountants, particularly the new generations. I'm talking about, even for your information, it may happen to you also. So we are still learning from our students. Students, I'm talking about our assistants, because they are from the new generations. They are very much comfortable as compared to us in the computerized accounting system. So they can easily apply the audit methodologies for that. And technology enabled audit tools. We have different what it is called the GAP, generally accepted audit techniques, or it is CAT. You can recall the computer aided audit techniques. So we can use those techniques, and it is not applicable to India only because of which we are following. Say for example, I can give you a simple example, then you can recollect. You can you can relate it with, say, our Indian computers. So what we are using, with maybe the Excel, it may be the Word, what you are using. It is basically the foreign country based, and even we cannot change the date pattern. So today is 30th June 2025. So we write 30.6.2025. But if you go to the computers, they will write 6.30.2025. Why they are writing this? Because this is developed in those countries where they follow these styles. So we know what are the differences and we can make it. And collaborations with other auditors and experts. So it is also very much required that we can take the help of different other auditors of those countries. Even I can recall they have agreed. I'm telling you, 2 countries I can tell you about. I should not mention the name, otherwise they will be degraded. I should not mention. They have told that your Indian accountants, irrespective of chartered accountants, cost accountants, and other public accountants, in practice, Indian accountants are better as compared to our accountants, because your course material are so good. That means you are equipped with so many audit techniques. So we are not familiar with those techniques, though we require only in case of some advanced countries. It may be in Germany, it may be in France, it may be Spain, it may be in USA, or it may be in UK. Otherwise, in most of the countries where we can do the this type of audit, so it will be easier for us to cope up with their system, because our system is better as compared to their systems. Now I am coming to the main aspects of this presentations. That was a theme for today's discussion. So I'm just sharing some of the key considerations. These are not the all key considerations. So these are the issues. I'll give you some other stories also when the time will permit. Now, what are the key considerations? Cross-border audits involve evaluating entities. Already I've mentioned. Either you can go for audit of an entity or transactions. So you are not conducting audit of that entity, but some of the transactions affect your entity with a foreign entity. So that is why you are doing audit for the transactions that span multiple countries or jurisdictions. To ensure compliance, we have to consider the following. Number one, comprehensive risk assessment. Comprehensive risk assessment. So there is, a risk assessment. We call it different types of risk. So I'm not talking about the financial risk. I'm not talking about the business risk. I am talking about different other types of risks here. So say, for example, I can share you one of my experience in conducting impairment test, impairment audit, we call it impairment test in a foreign country. And in case of impairment test, you may know that we are required to we have to convert the present value into fair value. And in case of converting those values into fair value, we have to discount it with the help of a fixed discounting charge rate. So usually we have the practice of carrying the last year's audit file in order to conduct audit for the current year. So I have been sent somewhere where in the last year, my managing partner used to. Now you can think of, sir, you are a professor of a college and you are talking about, yes, I have a book of auditing. So this is totally theoretical, but I am not interested to share with you any theoretical aspects. I am also a practicing public accountant in addition to my faculty job. As the dean of a college, I am also doing having the certificate of practice. So I am doing on behalf of some other consultancy of some other firms, audit firms, either directly or indirectly. So their audit. So it is one type of impairment test. So I thought last year the discount rate that was thought of 14%. So I thought this year also we can take 14% as the discount rate. And according to we have calculated the fair value and do the impairment test, whether there is an impairment loss or not. So when I have sent this through email, all the files can be sent to the. So I am there in a country where I can send. I have conducted the audit. I send the report to the managing partner or the signing partner here. When I send, you are surprised that you have taken only 14% discount rate. Sir, I have just copied your discount rate, what you have followed in the last year. He has told SK, you have done a great mistake. This type of countries are suffering from two important risks. You have to take into consideration those risks. Number one is the foreign currency fluctuation risk. Foreign currency fluctuation risk, because due to exchange rate fluctuations, so the value of money affects. And not only that, the political unrest, or there is a problem, say where, or political problems in that country or terrorism in that country may affect the risk of getting the money back. So that is why when we'll be talking about comprehensive risk assessment, we have to be very careful. We have to identify the potential compliances risk and prioritize our audit targets based on factors like product complexity, that is what type of product they are producing. Today I was there in an interview. One person came. He was the sales manager of like one of these multinational companies. So he was talking about that we are selling our products also in Dubai, that is UAE. So my question was, if you sell the product in Dubai, the same product, I can tell you the same product is also available in India. So their price and Indian price is totally different because they have to take into consideration a number of other factors in order to fix the price. Similarly, in order to calculate the risk, we have to take into consideration all these aspects. Second key consideration is the internal control. Establish strong internal control with clear potentials, policies, procedures, and guidelines. Communicate to all the stakeholders. Usually audit is a matter of teamwork. It is not only the signing partner who will do the audit work. It is not only the managing partner, it is the audit staff, it is in our case the article assistants. We are in a group of work. So what is our objective? How to do controls over audit? I'm not talking about the internal or control of the client. So that is a part of our evaluation process, and we are required to have annexure 1, that is internal financial control in our audit report. I'm talking about the study audit report. I'm not talking about that. I'm talking about the internal control system among our audit team, so we can share policies, we can share the procedures to be adopted. Even every foreign assignments, our signing partner or the managing partner provides are the very concrete audit program on the basis of which we have to do that. And regulatory monitoring. So we cannot say that it was not, this regulation changes was not known to me. So we have to track the regulatory changes on a regular basis, and we have to get ourselves updated throughout our audit procedures. So these are the key considerations, and you can think about the documentations in brief. Documentation was covered in SA 230. We are talking it as the working papers. I'm talking about SA 230, tax registrations and filing. So we are conducting audit there. So whether our income is taxable to that country or we can share our income with the Indian counterparts. So that is why in some countries it is totally tax free. In some countries we have to share our audit fees. So in order to share audit fees, so if it is taxable, we have to get ourselves tax registrations for this purpose, and we have to file for the foreign. This is a complicated area. I'm not discussing in detail about this. Maintaining tax registration certificates, tax returns, or tax residency certificate. That means resident, non-resident, etc. Customs and shipping documents ensure accurate commercial invoices, packing list, bills of lading and airways bills, import-export licenses, and certificates of origin. Because I have to cover at least a few more slides. That's why. And third one is very, very important. Third one is very, very important. They are giving us the data. So the security of the data, the protection of the data, it is the what it is called. We have to maintain the secrecy of the data. So how the data can be maintained, because now on online mode, offline mode, we have to go. We have to go there. We check the books of accounts, but when in online mode, so we have to go. We have to visit their websites. They share all the online materials to us. So how to maintain the protection or protect the secrecy of the data, because it is the client's data. It is the client's data they are sharing with us. We should not share this data. There should not be any hacking of our database. So that, and there is the concept of ethical hacking or so many things. In some cases they are doing for the betterment. We are not coming to that part. We want to say that implement technical safeguards like encryptions. This is why you know how it has to be. So first of all, it has to be coded and then decoded. So access controls over this. We have the concept of virtual private networks, VPN. So it can be shared only with us. No other can open it. And regular audits to protect customer data. So I'm talking about the system. So we have to take into consideration whether the data is protected or not. We have to visit on a regular basis. So this is about in short, documentation and compliances. Now coming to the audit procedures in brief, as was told, so we have to do the data analysis and review. We have to make some online visits in some cases. Online visit is also required. As I've told you, in all cases, documents are not available to us. Some of the cases, a physical store verification. So in some cases, we do online visits, stock destroyed by fire, online visits, or so used stock fall in a particular, all stocks are sold or acquisition stocks. In some cases, we have to go there to see the reality. And third one is the record keeping. So let me explain one or two lines. First one, data analysis and review. Scrutinize import entries. That means what we are getting from the clients through uh, through our VPN, as I was told, what we are getting from our clients. Verify classifications, valuations, country of origin, and other key data elements. So these are required for the purpose not only on consolidation, because country of origin is also required, but also the valuation. We have to follow the international valuation practices because different countries, their valuation standards are different. So we have to take into consideration the global valuation standards. Otherwise, we have to take into consideration the valuation standards of the holding company like this. On-site visits, inspect facilities and gather relevant documents, including entry summaries, invoices, and certificates of origin. And finally, we have to retain. Though Indian Companies Act talked about retention of working papers, not the books of accounts. Books of accounts we cannot retain, but I'm talking about working papers. Working papers in Indian, it was given in section 128 of the Indian Companies Act that we have to keep working papers for audit working papers for 7 years, not 8 years. 8 years the books of accounts, 7 years for audit. But it is, the data set. We can retain the import records for specified period, typically 3 to 5 years. It varies from country to country, maximum 3 to 5 years, and ensure they are readily accessible for customs audit. So this is a different dimensions. I'm not discussing that portions also. To specific requirement. Now it specific means it varies from country to country. So I am coming to the end of my presentations because as was told, it will be till 6. So I think within 5 minutes, I'll be able to complete my presentation as our chairman, sir, has talked about Singapore. As I've told you, the Indian public accountants, particularly the more between the ICI, the Institute of Chartered Accountants of Singapore, they have given the permission to the Indian Chartered Accountants to do conduct audit. But you see, what are the specific requirements? Here, the Indian companies that will not be applicable. Here, the RBI's regulations will not be applicable. So license entry. So you have to take the license there in order to conduct audit in that country. Though we are from India, the Indian public accountants must undergo annual independent audit of cross-border arrangements and submit certifications to the Monetary Authority of Singapore. It is like our SEBI. It is the Monetary Authority of Singapore. This is the specific requirement, and from country to country, so it varies. So it is not possible for B or for you to memorize, make yourself familiarize with the rules and regulations of different countries. Say, for example, if you visit Sri Lanka, if you visit Mauritius, if you visit Singapore, if I'm talking about Asian countries, if you visit some European countries, you have to be familiar with only the regulations of that country. Otherwise, it will be very difficult for you to take it into considerations. So here I'm talking about the global regulations at the end. Familiarize yourself with regulations like GDPR of European Union. I'm just giving some examples. UK GDPR is different from European Union GDPR, though UK belongs to European Union, but their GDPR is different. PIPL, I'll tell you what is PIPL of China and emerging trends of data localizations. So we are calling it data localizations because our age is an age of compressed accounting system. So we have to make ourselves familiar with this. I'm not discussing all this in detail, but I'm giving you the idea. Just you can now through AI, through Google, you can go through and you can get all this information. So what I'm showing you here, it is not available in any book, particularly any book. Though I have a book on auditing, but it is not available because it is applicable to small number of fractions of auditors who are required. So that is why it is not there. So it is GDPR Union. This stands for General Data Protection Regulations. General Data Protection Regulations of European Union. They have their own objectives. They have their own aspects of GDPR. I'm talking about European Union. I'm not going to discuss in detail application of GDPR, why it has to be applied. You see, they have clearly mentioned that GDPR applies to any organization that offers goods and services to individuals in the European Union and monitors the behavior of individuals in the European Union. And non-compliance invites fine also. So many things. So this is the European Union GDPR. As I've told, we have the China PIPL. PIPL is Personal Information Protection Law. So it was applied in the Corona period, August 2021. So they are protecting the individual's rights and interests. And you know, the data of China is so secret. So it is difficult to get the data from any Chinese companies. So these are the accessibility scope, extraterritorial reach, nationality security emphasis, cross-border data transfer. I'm not discussing their compliances. And finally, in India, the last point that I want to emphasize in India. So we are having DPDPA. So DPDPA is the Digital Personal Data Protection Act. Digital Personal Data Protection Acts. I am not going to discuss on what are the rights and use of the users, obligations, penalties. So this is all about, in short, the cross-border audit. As the time is only given to me is 40 minutes. So I'm trying my level best to give you a brief idea. If you want to know more, you can go through any cross-border audit websites. So usually it is not available in the form of books and others. So that is why in that case, good articles may be available on this. You can go through the articles, but as soon as you'll get some foreign assignments, I expect you should educate yourself for this. So this is all about from my point. Thank you.
Thank you very much, sir, for your nice presentation. We are already very much enlightened with the topic. So, sir, we have received a few questions. So, shall we process the questions answer session, sir?
No issue. I don't have any problem if they because I think I am supposed to ask you that whether there is a question answer session, so I can make it 10 minutes earlier. Anyway, you can.
Yes, sir. It's a few questions we have received, sir. One question we have received from a participant: how does statutory audit play a role in risk assessment?
Oh, you are talking about the statutory audit risk assessment. So risk assessment, usually we are familiar with risk assessment in case of internal audit. You are talking about the COSO framework and others. We are talking about risk assessment means it is relating to internal audit. So for statutory audit is concerned, I'm taking about. So I have undertaken one assignments in the form of a capacity of a consultant. It is the World Bank projects. In case of World Bank projects, I am not the statutory auditor. Statutory auditors are from different. Their World Bank auditors are there, but I have been given to assess their fiduciary risk. I have been given that to assess their fiduciary risk so to what extent they will conduct their statutory audit, to what depth. So I'm talking about their coverage. So it depends mainly on the risk aspects. Fiduciary risk in one line, if I want to say, fiduciary risk means the risk for utilizing the money correctly in the area where it was given, the purpose for which it was given, whether the money has been utilized for that purpose or not. So I have done only the fiduciary risk portion. Others have done some internal risk portion. So many aspects of risk are there. Thank you for this question. But as we have the idea that when we are talking about risk, it is not only internal audit, it is also statutory audit in some cases, because our depth or coverage depends highly on the, and we have to evaluate the internal control system. Internal control system is nothing but the assessment of different types of risks. So it is highly related with the storage audit, because we have to have one annexures required to be given internal financial controls. And that is basically the detection risk, evidence risk, the internal control risks. So many risks are there. Anyway, thank you. And
Thank
any
you,
other
sir.
question?
So, next question. Mr. Sandeep Agarwal has asked, can global audit standards endure if economic data becomes a geopolitical weapon? May I repeat, sir?
Yes.
Can global audit standards endure if economic data becomes a geopolitical weapon?
Geopolitical open is a different thing, just for your information, but it brings uniformity. I got your question. So it is, we are not thinking in that line, but you see, uniformity is the basic objective of the global auditing standards, that is ISA, International Standards on Auditing. International Standards on Auditing, it is governed by IASB, and IASB, it is under IASB is under our IFAC, International Federation of Accountants. They are issuing this. So geopolitical is a different issue, but you see, if it is required to be used by someone else in a different way, so opportunities are there. As you have mentioned, opportunities are there, but usually we, the auditors, we do not do this anyway.
Okay. Next question, sir. How can digital evidence be verified against state-sponsored cyber threats and deepfakes? May I
Cyber
repeat,
threat
sir?
is a cyber threat is not applicable only the cross-border audit. Cyber threat is applicable to everywhere. But the point in your banking transactions, starting from your banking transactions to digital data. So privacy, I am telling you, privacy is at stake. So if you are not having any private document of yourself, if you are discussing anything, or if you just give Google search what is the price of airfare between India and UK, so immediately you will get a number of, that is number of offers from different air companies, air flight companies, that is these are the offerings from us. So how can they know? That is, privacy is really, but as I have told you, I have mentioned some of the protocols. I am talking about the digital protocols we have to maintain through VPN or other techniques. We have to maintain some protocols, IP protocols I am talking about. With that IP protocols, with the help of these IP protocols, only we can manage the privacy of the data. Otherwise, privacy is at stake after the introduction. I'm not talking about the AI, but I am talking about there is a concept of data analytics, okay, and machine learning. So LMS, all these, all these are in fact fighting with each other to capture data, and this is difficult to maintain the privacy of the data. I know what you are talking about. This is very important and crucial aspects, but it is not applicable only in case of cross-border audit. It is applicable to everyone.
Thank you, sir. So next question is how to manage the different currencies fluctuations in relation to consolidation of balance sheet.
No, we have specific about the standards. I'm talking about the IFRS is also talking about how to record the foreign currency transactions, and it is, some are following different methods they have mentioned. It is not up to us. It is basically the accounting policy, particular company is following. If the company is following a particular policy for the translations, I'm using the term translations of any foreign currency transaction, that has to be mentioned in their accounting policy, and we have to follow that accounting policy. And in between, if they switch over from one accounting policy to another accounting policy, say for example, they are usually taking the balance sheet data foreign exchange rate, that is different. Or if they take, usually we are taking that average foreign exchange rate for the purpose of translation. So everything has to be mentioned. Everything has to be mentioned in the accounting policy, or if it is not mentioned, that we have to include it in our audit report, that this is the practice they are following, which is not mentioned in their accounting policy.
Okay, thank you, sir. Due to constraint of time, we are taking one more question, sir, only. The question has come from CMA Santosh Sharma. What are the biggest risks or gaps you have encountered in cross-border audits, and how can audit teams maintain consistency and transparency across regions?
Interesting question, but usually we are not facing this type of risks because our risk is taken care of by two organizations. One is the client itself, because it is not our interest, it is their interest they are facing. And the second one is if the client is not at all interested to provide us all the data, so they are delaying to supply the data. So we could not. So this is the reality. We could not complete our audit within the time limit, because in case of global, they know our arrival and departure time. That is when I'll coming to Dubai, say for example, and when we are leaving to Dubai. If it is 7 days in between, so first 3 days they will not provide any data. They will tell, sir, we are preparing it. From day 4, they will start giving us the data, and it happens that in this next 3 days, so whether we'll check all the data or we'll prepare the report. So it is a great threat to us that we could not complete our work. I know the dimension you are talking about is a different dimension, but I am telling you a real problem that we are facing in conducting our audit. Okay.
Thank you very much, sir. We are concluding our question answer session here, and we are very much thankful to you, sir, from the core of our heart, on behalf of our department and all our audience. We are very much enlightened. And now I would like to request our HOD Madam, CMA Sucharita Chakraborty Madam, to give the vote of thanks for this session. Madam,
just in between, I want to say one thing. That means, so I think you have the feedback mechanism also. Though I am in the teaching profession for the last 32 years, so teachers are different from trainers. This is basically a training. Webinar basically one type of interactions. So teaching is different. So if you have any feedback, so you can share with the feedback with me, so that I can also make myself improved one. The next version, it is version of the presentation should be the improved one, better one. Thank you.
Thank you, sir. So, madam, the session is now hand over to you, ma'am.
Namaskar. Now we have to conclude our insightful webinar on cross-border audit key considerations. I extend our heartfelt gratitude to Dr. Sanjeev Kumar Bashu, Dean, Postgraduate and Research Department of Commerce, St. Xavier's College, Kolkata, for gracing us with his presence and delivering such a thought-provoking session. His deep insights into the evolving dynamics of cross-border audits, regulatory frameworks, and risk considerations were not only timely, but extremely relevant in today's global business environment. Thank you, sir, for sharing your expertise and enriching our understanding.
Okay, thank you. Can we leave now?
Sir, yes. Just 1 minute.
Okay.
Thank you to our Chairman, General Publication Committee, CMA Harshav Deshpande sir, whose guidance and vision made this event possible. I would like to thank to all of our participants and attendees who joined us from various corners and made this event truly engaging with their enthusiasm and questions. Our sincere appreciation to our Today's moderator, Mrs. Shomalika Chakraborty, other team members, technical staff, the dedication and hard work ensured the seamless execution of this event. Before we end today's session, let us take a moment to extend our heartfelt shubhecha to everyone on the auspicious occasion of Ratha Jatra. This festival symbolizes the divine journey of Lord Jagannath, Lord Balbhadra, and Devi Subhadra, and inspire us to move forward in life with devotion, unity, and purpose. May the blessings of Lord Jagannath bring peace, prosperity, and success. With the spirit of divine progress, we now end today's webinar. Namaskar.
Thank you. Thank you.
We are concluding our session here, madam.
Yes.
Thank you, sir. Thank you, madam.